Okay, so I'm conflicted. It's a very, very volatile company, very volatile earnings, but it's growing and the trend line seems to be heading in the right direction in a stable manner. It's just a lot of ping ponging back and forth around a rather stable trend line. So, kind of conflicted. I like it. If it wasn't so volatile, I'd probably do it at 9%. Um, if it wasn't growing at the rate it was growing and it didn't seem like such a stable industry, I'd probably have it at 15%. So maybe it's a market discount rate of 12%. I think that takes into account the risk involved, and it also takes into account the stable nature of the type of business it is. There's a nice moat around this business right now, and it's very cheap. So I'll go with 12% on that. I'd love to hear what you guys would come up with for a company like this. Fertilizer, it's a weird business, I guess. I go back and forth on it. So I'd love to hear what your thoughts are on that, on how you would come up with a discount rate. So anyway, if I do that and I go with 12 and 12, I get a fair value of 482.35. So my margin of safety is 62%. So this looks like a pretty good one to me. I am pretty happy. It's 6 times earnings. I kind of expected that. But usually at 6 times earnings, there's some weird spike and a lot of debt and everything. But they don't seem to have that. And it seems like management's been pretty prudent in their growth strategy, which again makes me more on the stable side with this discount rate. However, let's take a look at what do we got here on free cash flow. Our amount is 1852. That looks like it's pretty stable over these last years, and this is including that acquisition now. So I think this jump here from 2010 to 2011 includes a new injection of free cash flow that is stable, and it's not just a one-off spike. If we look at owner's earnings, we get this 1407. If we put in the trailing 12 months at 1104, let's get this right, 1104, and we hit refresh, we get a margin of safety of 38%. If we do that, if we look at our new owner's earnings being this trailing 12 months number, we're at 38%. So there's some up and down on this. This is one of those that I'm really close on. I'm actually in it. In a way, I bought long-term call options on it, leaps on this company. I'm to kind of lever up because I didn't want to put so much money to buy 100 shares, and that would be $18,000 into this company. So I used options instead to kind of lower my risk because I wanted to spread it out some as well and get into some other companies that are out there as well. So that's where I stand on it. I think it's a good company. I'm intrigued by it. I'd love to hear more about what you guys think on these companies and get a debate going on where you think it is. I am a little concerned on the macro environment, though, the macro economy, as opposed to looking at specific companies. This looks like a good one. However, I am a little frightened right now about where the economics are going overall. I could be wrong. People say we've got room to run. I'm starting to get to that point where everybody's feeling a little too euphoric for me, and then with Bernanke kind of shutting off the spigot, that's kind of spooked a lot of people over the last week or so, and I think people are starting to get a little skittish. So even though I see this as a buy right now, I think CF is a good company to get into. I'm just I'm a little concerned that prices are going to go down now that the cash flow is not there from the Treasury. They're not pumping more money into the economy. I think prices may be a little artificially high right now in a lot of sectors, and it's going to take down the good with the bad. But that's just speculation. I'm not selling out and waiting. I'm just a little bit more cautious right now than I was maybe 2 or 3 months ago. I just think there's something that's going to happen here, and everything's going to start domino affecting. Now, people have been on the sidelines a lot and in the market a lot, just not knowing where it's going to go, and I think we're getting a little bit more clarity on where everything's going, and I don't see it being a straight shot up now. So I think there's going to be a little bit of a pullback here in the near future. But long term, I'm still in the game. I'm still in CF Industries and all the other companies that I've talked about so far. My opinions on them individually have not changed. It's just the macro economy that's got me a little bit skittish right now, especially if interest rates start to creep back up. That's it for now. Hopefully I'll get you another video here in the next couple weeks or months. It's just been hard to find companies to look at that interest me lately, with all the different things that are going on. Personally, I just haven't had time to look at them, and quite frankly, when I do go out and look, I'm not seeing a whole lot, which is another reason that I get kind of skittish about the overall market, when there's not a whole lot out there that interests me, and there's not a whole lot of opportunity. That kind of leads me to believe that things may be a little overvalued. But that's just an opinion, and that's pure speculation. I have no inside knowledge on that and how that's all going to affect everything. I think just looking at a company on its own is the right way to go, and long term it'll be the most profitable way to go. I just have a feeling that something's going to happen in the near future, but I hope I'm wrong. Anyway, take care, enjoy the summer, and hopefully I will talk to you again soon. Bye.